Okay, now what I want to tell you is don't hesitate to cancel or not writing this. You better attempt, thereby, you'll get good marks. And in that paper, you will be given part A and part B. In part A, you will have 8 questions, and out of 8 questions, you have to answer 5 questions. Each question carries 4 marks, so 5 into 4 is equal to 20 marks. And after that, you will come across part B, that is 9, 10, 11, 12, 13. And you will have internal choice, that is 9A or 9B. Similarly, 10A or 10B, 11A or 11B, 12A or 12B, 13A or 13B. So like that, you will be given the internal choice questions, and you have to answer only one question. And please write the question number and attempt that. And here in this financial accounting 1, it is compulsory that you have to write the final accounts. Okay, you have to do the final accounts. What I want to tell you all is, don't attempt the final accounts problem first, because okay, you can do something, you can do up to certain extent, but after that, if you come across any doubt, automatically the time will be wasted. Instead of that, you please keep the final accounts problem at last. Okay, spare 1 hour for that, and in the remaining 2 hours, try to complete the remaining portion. That is whether it is a short answer questions or 4 long answer questions. Leave the final accounts problem at the end. That is, spare 1 hour or 45 minutes. Okay, for that. And another thing is, don't try to, after completing the examination, don't while coming out, don't ask about the answers, because different people, they'll get different answers. So when you are going to ask the answers, okay, some may tally and some may not tally. So when the answers, when they are not tallied, you will get a doubt that whether my way of doing the problem is wrong, or whether my way of solving the problem is correct. So automatically you will get a confusion, so thereby it will create some tension to you. So whatever is completed, okay, completed. Okay, it is not you to decide, it is the evaluator who has to decide about that. And another thing is, when you are doing any problem, whatever it may be, okay, 1 to 3 times, 1 to 3 times read that problem, because half of the answer will be in that problem only. Okay, journal entries. First, I'm going to start with journal entries. Theory questions you will have, that is accounting principles. When you go for accounting principles, you will have 14 accounting principles, and these 14 accounting principles, they are again divided into two types: accounting concepts and accounting conventions. So accounting concepts, whatever you know, you be prepared for that and write them in a correct manner, in a correct manner. Okay, and after that, what is accounting cycle? Accounting cycle is nothing but recording the transactions, okay, and some analyzing the transactions, and again communicating the results or interpretation of transactions, and again going for that. This is nothing but a cycle. Everywhere, every day, you will have these transactions, and you have to record them, you have to interpret them, and you have to communicate them. Like that, you will come across. And one thing you have to know is, analysis is very, very important. You have to analyze. When you can analyze, automatically you can interpret the transactions, what to do and what not to do. And coming to problematic aspect, I'm telling you, okay, you will be given the transactions, and you are supposed to write the journal entries. Okay, and after that, you have to write the ledger accounts, and then you have to go for the trial balance. Okay, so first of all, you have to know the three types of accounts: personal account, real account, and nominal account. Okay, these three things and the respective rules for that. Okay, when you go for personal account debit, the receiver, credit the giver. When you go for real accounts debit, what comes in, credit what goes out. And when you go for nominal accounts, debit all expenses and losses and credit all incomes and gains. Like this, you'll come across. So first of all, you have to identify whether that type of transaction or whether the things your personal accounts or personal and real accounts or personal and nominal accounts or real and nominal accounts, like that you have to analyze and you have to get them. So thereby automatically you can be in a position to pass the journal entries. And after passing the journal entries, ledger accounts, you have to see how many accounts that you come across, and in that number of accounts, what are the commonly appearing accounts. So that commonly appearing accounts you have to first of all prepare that. So thereby complete transactions they will come into that. For example, cash account. Okay, from starting from beginning to ending, you will come across cash account. So only one time you have to prepare the cash account. There is no necessity for you to prepare every time the cash account. All the transactions they will appear in that cash. Similarly, bank account. Okay, whatever it may be, the accounts that are related to bank, they will appear in that bank account. So after repetitive accounts, then you have to count how many accounts we have to see. For example, you will come across 11 accounts. In that cash account and bank account you came. Okay, two accounts. Okay, first of all, prepare the two accounts, cash account and bank account. So you will have remaining nine accounts, and nine accounts you have to prepare. And when you are preparing this ledger accounts, you have to observe one thing. It will be in a crosswise manner. Okay, whatever it may be, the journal entry, okay, it is just in a crosswise manner you will come across. Okay, so that is nothing but ledger accounts. Then after preparing the ledger accounts, one thing you have to understand is which side is more, which side is less. That is totaling. First of all, totaling is compulsory. When the totaling is wrong, automatically everything will go to wrong. Okay, so be careful and don't get stressed. Okay, you better take calculators and total them correctly. And whichever side is more, you have to write that on the other side also. Suppose, for example, if credit side is total. So whatever it may be the credit side total, you please keep that on the debit side total. Thereby you will come across the lesser amount. That is what how much is the lesser amount, and that amount you have to write that as to balance carried down. And that carried down balance, it will be the brought down balance on the opposite side. If the carried down balance, if it is on the debit side, the brought down balance will be on the credit side. Okay, so like that you have to balance. Here when you are preparing ledger accounts, totaling and balancing, they are very very important. Don't forget that, please. Okay, and whatever it may be the balances that you come across, don't go for carried down balances, please. Take only brought down balances of every account, and write that whether they are appearing on the debit side, okay, or credit side. Debit side balance, brought down balances, you have to show them on debit side, and credit side balance carried down amounts, you have to, okay, brought down amounts, you have to show that on the credit side. So when you are preparing trial balance, okay, one thing you have to keep in mind is all assets, drawings, whatever it may be, all assets and drawings, they will appear on the debit side. All losses, all losses and expenses, they will appear on the debit side. All incomes, all incomes and capital and creditors, they will appear on the credit side. And one more thing is provisions whatever you come across, that provisions also they will appear on the credit side. So like this it will be easy for you to prepare the trial balance. Okay, then after preparing journal entries, ledger accounts and trial balance, you have to go for subsidiary books. In that subsidiary books, okay, you will have 8 books: purchase book, purchase returns book, sales returns book, cash book, okay, bills receivable book, bills payable book, okay, like that you will have 8 types. In this 8 types, okay, the first four, that is purchases, purchase returns, sales returns and cash book, these are all very very important. And regarding is bills receivable book, bills payable book and general proper, they are not up to that much, that is they are not going to give you. And these things you must be very thorough. Okay, in purchase book or sales book, only you have to write credit purchases. Sir, how to locate that? Whenever you come across a person's name, whenever you come across a person's name, then that transaction is nothing but a credit transaction. Suppose if you come across the person's name and after that for cash, then it is a cash transaction. So whatever it may be the credit transactions that you will come across, whether you go for purchases or sales, you have to show that in purchases book or sales book. And whatever it may be the returns that we come across, written inwards and written outwards. Written inwards means sales returns. Written outwards means nothing but purchase returns. So these things you must be very careful. Okay, some because sometimes they'll give sales returns and purchase returns. When they give like that, okay, well and good. But when they give written inwards and written outwards, don't get yourself confused. Written inwards, okay, written inwards means whenever you are selling and when some products or some goods, when they are of defective nature, naturally those people they will return that. So written inwards, we are getting that. And written outwards, when you are purchasing and when you find that some goods are of defective nature, naturally you will give that. So that is nothing but written outwards. So written outwards means purchase returns and written inwards means sales returns. Okay, and when you go for cash book, you will have a single columnar cash book, double columnar cash book, and triple columnar cash book. In this, three columnar cash book is very, very important from examination point of view. So in triple columnar cash book, okay, you will have discount allowed, cash, and bank columns on receipt side. Similarly, discount, cash, and bank on payment side. So the procedure is first of all after going, that is while going for this three columnar cash book, date, particulars, LF, LF or JF, whatever it may be, LF, and then you have to write discount. Then after writing discount, you have to write cash, and then last one is bank account. Either it may be in receipt side or in payment side. This is the procedure. And in three columnar cash book, one thing you have to keep in mind is you will come across contra entries. So what is contra entries? Opposite entries are nothing but contra entries. Opposite entries are nothing but contra entries. So the effect of that contra entries will be nullified then and there itself. There is no necessity for you to think about those things again and again. So they themselves they will be nullified. And when the contra entries will come, when you are depositing cash or check into bank, then you will come across contra entry. That is first contra entry. And second is when you are withdrawing money for office use, mind it, for office use, then only you will come across contra entry. Suppose when you are drawing money for personal use, it won't be a contra entry, it will be by drawings, like that you will have to write. But when you are taking money from the bank, when you are withdrawing money or cash from the bank for office use, mind it, for office use, one to two times I'm telling that, for office use, then contra entry will come. And one thing I want to tell you here is, okay, suppose if you receive a check, and okay, and you kept that in your cash box, and after some time, if you take that cash, I mean check, and if you deposit that, then you have to go for contract. When you are receiving a check, then there is no necessity for you to go for contra entry. When you are going to deposit that, then only the contra entry will come. Mind it. Okay. Next thing is, okay, BRS. This is a very easy chapter, but it seems to be very difficult. See the peculiarity. Okay, it seems to be very difficult. Arey, what we have to do, what we have to do? Nothing to worry. Okay, and in BRS you will come across cash book bank column, cash book with bank column. Only that thing will come, and the bank people, they will write in their books, and they will give a duplicate copy to you. So that is nothing but passbook. Okay, here you will come across two balances, whatever it may be, whether you go for cash book or passbook. Favorable balance and unfavorable balance. Favorable balance, when we come across in cash books, when receipts are more than payments, you will come across favorable balance. When payments are more than receipts, you will come across overdraft balance. Similarly, when you go for passbook, when deposits are more than withdrawals, it is favorable balance, and when withdrawals are more than deposits, it is unfavorable balance or overdraft, whatever it may be. And before going for this BRS, don't write that straight away in the answer booklet. Go to the rough page and see that, okay, which account is to be added, and I mean which item is to be added and which item is to be deducted. After getting confirmation, then only you have to go for checking. Okay, this facility you will come across in BRS only, not in any other topic. Okay, so whatever it may be, the balance that you derive, whether it may be cash book balance or passbook balance, okay, take that. Okay, how the checking will be, take the balance what you derived, whether it may be passbook balance or cash book balance, then whatever it may be the added items previously, you have to deduct, and whatever items you have deducted previously, you have to add. So then automatically you will come across, then go for the main answer booklet and then show that. And when you go for the next topic, that is depreciation. In depreciation, you will be given two items, that is two methods, that is straight line method or fixed installment method or original cost method. Okay, this thing is for the first method, and second one is written down value method or diminishing balance method or reducing balance method. The names will be different, but the procedure is one and the same. In fixed installment method or straight line method, okay, same amount of depreciation you have to deduct every year. Mind it, you have to go for year wise representation. Okay, in fixed installment method, the depreciation amount, whatever you calculated, that is compulsory up to the last extent. And in diminishing balance, that is in the second method, the depreciation amount will come down. Okay, the come depreciation amount will come down. That is, whatever it may be the first year depreciation, and whatever it may be the amount that you derive, on that only you have to calculate the depreciation. Okay, mind it won't be the same like fixed installment method. And another thing is, you have to observe the dates. When dates are given, then only you have to go for calculation of depreciation. If dates are not given, there is no necessity for you to go for calculation of depreciation. This is next, rectification of errors. Depreciation and rectification of errors you will come across. Rectification of errors means nothing but rectifying the things what had gone wrong. Okay, here you will come across undercasting, overcasting, and uh, keeping the money in other account. Okay, instead of one account, keeping the money in other account, all these things will come. So when you come across undercasting, it means it is showing less. When it is overcasting, it is showing more. When you come across undercasting, you have to write on the same side, and when you come across overcasting, you have to write on the opposite side. Now, another thing is, okay, suppose if you write, if they write in a wrong account, which is not okay relevant to the thing, then you have to find out which one is the wrong this thing. There you have to find out what is correct entry, what is wrong entry, and what rectifying entry we have to pass, because already they have passed. You cannot remove them, you cannot rub them with an eraser. Okay, so how to rectify that? Eliminating the irrelevant account and showing the relevant account, that is most important. And I told you about this final accounts. Okay, final accounts, they are to be done at last. And another thing is, when you are going for final accounts, first of all, take the trial balance and total that first. Okay, before going for final accounts, take the trial balance and total that. When debit side and credit side, when they are equal, then automatically the balance sheet also will tally, because trial balance is the indicator of balance sheet. So first of all, you have to total the trial balance, that is most important thing. Okay, then, okay, trading account, profit and loss account, and balance sheet. Here you have to observe one thing is, whatever it may be, the items that you come across in trial balance, they will have one fold effect or single fold effect. And whatever it may be, the items that you come across in adjustments, okay, they will have two-fold effect. That is, they'll appear either in trading account or in profit and loss account, that is the first fold. And the second fold is they will appear in the balance sheet. So only adjustments. Sir, what are adjustments? Okay, whatever it may be, the transactions that we come across after preparation of trial balance, those things, they will take that as the adjustments, because those things, they belong to that year. Okay, they belong to that year, and we cannot transfer them to the next year. So this is how you have to write your exam. And all the best to all my first year students. I'm not pinpointing some people. To all my first year students, those who are writing the first year financial accounting 1, okay, have a good day and best of luck. And if it is good, you please subscribe to my channel. Thank you.